part two of this how to make money in crypto, especially in a bear market, is about two different ways to actually make money. I want to cover two different ways. And the first one is conservative, but with some risk involved and not your own risk. And the last one is fully on you, the risk, but the potential for gains could be exponential. So let's get right into it. All right. So what you guys see on the screen here is Crypto.com. And the first way to make money that is conservative with risk on the platform itself is actually earning yield on your assets. So if you own, majority of coins will actually have some sort of percentage yield that they will give you just to lock up on a platform. So whether that's Bitcoin, ETH, Avalanche, Algorand, Cardano, a lot of different coins on there that if you just kind of keep it there, meaning you don't have access to it, you can't withdraw it, they will give you a percentage return, whether that's over the year or at a fixed rate. All right, so I'm going to show three different exchanges. We're going to cover Crypto.com, I'm going to cover Binance, and Coinbase. All of them have similar structures. Some are more in-depth and more options, but for the most part, they all have this simple staking tool, okay? And it's called staking. So if you look here, Crypto.com, the easiest way to really find these things is you kind of just go to the products and then you see crypto earn. Anything that says earn, that's where you're gonna find it. All right, so if we click on crypto earn, it's already here. Now, Crypto.com's changed things since I last saw it. They've come up with standard rate and private members. That is kind of just termed it different things. And so based on, if you guys can see here, if you're a private member, you get 5% per year. For Bitcoin, 6% up to. Now remember, this is up to. This is what you make. It's up to 6% per annum on ETH and then up to 6.5% on USDC. So what is it that kind of dictates that up to? How do you get to 5%, 6%, 6.5%, right? And if we go to standard, before we go to standard, you see that they're much lower rates, 3%, 4%, and 4.5%. So let's go back to private. Okay, so what's nice about Crypto.com is that they'll actually allow you to they'll give you a tool here to find out what your rewards will be. They have a lot of these calculators out there for standard stocks or dividends where you can put in how much you invest and what you can expect to see going down the road in terms of the yield on the amount you put in, right? And so here, if we did Bitcoin and we said, well, let's just put in 1,000. So I put in 1,000, and so this is really where they get you on the up to part. All right, so if I click this option here, and this is going to show you three different tiers. But even before we even get to the tiers, it's what do they mean by Crow stake? So all of these platforms, I would say majority, if not all, are going to have a native token of their own. And what they want you to do is they want you to purchase their tokens, but then they also want you to purchase it in quantities that will give you an incentive to stake other assets. So for example, here, you've got tiers here that are going to show you, well, if you have less than 4,000 Crow, it's going to give you a certain percentage if you lock it up, right, for 3 months. So if we did this, you see that the rewards here went to 2% per year. If we change this and we said 4,000 to 40,000, that's 3% per year. And if we change this and go to 40,000, we're looking at 5%. Okay, so remember, when they said up to 5%, that all had to do with how much Crow you have and how much you're going to stake for. So we can do 3 months. We can say it's flexible, meaning you have access to it whenever you like. So we're going to keep everything the same, 40,000, we're locking it in, but we're going to say it's actually flexible. Look at the reward, 0.25%. Even though you have 40,000 or more Crow staked, you get 0.25. If we go to 1 month, it bumps to 4%. And then if we do 3 months where you lock it in, you get 5%. So this is kind of how they do that. Now, you might be wondering, well, how much does Crow cost? Right now, Crow's at about, if I look at CoinMarketCap, I've kind of already pulled this up for you guys. We're looking at, about 7 cents, we'll say. So in order for us to get 40,000 Crow, you're looking at about $2,800. Now, during the bull run, Crow had gone up well past, I want to say 70, 80 cents. So that 40,000 to buy those was a lot more expensive. But so this is what you gotta do. You gotta buy Crow first, then you gotta lock it up, and then you've got to deposit your Bitcoin in there, and then you're gonna lock up the Bitcoin for 3 months. Okay, so that means you do not have access to it whatsoever. And this will show you, you will get for $1,000 locked up with 40,000 Crow or more for 3 months, you'll get $50 for the year. But you actually paid it in Bitcoin back. That's the nice part. So whatever the asset you have locked up, that's alongside Crow, where you want to actually earn the interest, that's where you're going to get in return, but in the same token. Okay, and so you get 5% rewards on Bitcoin, but paid out in Bitcoin. All right, but this is kind of what they do, is that they set up these tiers. They want you to buy their native token, lock it up, and then lock up the other token. And now you're sitting there and you can't do anything with it until that time period ends. So if we look to Binance, say, so Binance is here. And if we look here, and what did I say? You look for something that says earn, products, whatever it is. So here's earn. Now Binance has many options. You can get pretty complicated here. You know, simple one here is Binance Earn or Simple Earn. So if we go to Binance Earn, it will show you something similar. Okay, so they've kind of spread things out a little bit different, categorized it different, where you can say best for beginners, new listing, all kinds of stuff in here, right? But you can see here, this is Axie, this is Polkadot, Near, Avalanche, there's stablecoin, Cardano, USDT, ETH, all that there. And there's more, there's a whole list that goes down. But let's say if we go best for beginners, what do we get? Doge. I'm not sure why Doge is best for beginners, but what it is they're attracting beginners, and beginners usually come with hype, and Doge is one of the biggest meme tokens out there, so I can see why that's there. But if you look at Bitcoin here, Simple Earn, you know, the return here, now this is a fixed rate APR, fixed rate of 1.5%, right? That's a fixed rate, but the timing, the duration that you have it locked up is flexible, meaning you can take it out when you like. And if you hover over these things, they'll show you what the APR tiers are. If you have 0 to 0.01 Bitcoin, you get 1.5%. If you have 0.01 to 0.2 Bitcoin, it's 0.25%. And if you have 0.2 Bitcoin or more, you get 0.1% Bitcoin. So isn't that interesting? The more that you actually lock up here, the less rate you're going to get. That's just the way things kind of roll out now. All right, so this is Binance. I mean, they've got a whole bunch of other stuff, but we'll just keep it very simple. And then if you go to Coinbase, again, here we are at their homepage. What do we look for? You know, you can explore, you can learn, and then here for them, they kind of put it under individuals. All right, and then you just look, is there earn? Yeah, okay, there's earn. And then it says earn up to, again, we have that up to term, 6% annual percentage yield on your crypto. Okay, so this is for the year. And it can show you now all the different ones here. Now, there's DeFi yield, there's staking. I'm not going to get too much into that, okay, DeFi yield. We're just going to stick strictly to staking. You have the asset, you lock it in. What do you get in return? So if you look at Algorand, 5.75%, 2%, Cardano, Cosmos, ETH, all that. They don't even have Bitcoin in here for this simple staking. Okay, but what are the risks associated with this? I mean, why wouldn't anyone want to? Well, first of all, there's something called counterparty risk. And what counterparty risk is that it's not, you're not the risk. It's where the platform that you're using, they could be compromised. They could go bankrupt. Have we seen, you know, FTX, we saw Celsius, BlockFi, all these platforms. Whatever happens to the platform, the risks associated with that platform, you take on, because you don't hold your assets. These guys do. And so if they shut down, if they freeze your account, bye-bye to your assets. So that's the risk, that's the counterparty risk that you're taking, is the risk inherent to the platform itself. So that's the first thing here. All right. Second thing is the fact that your assets are locked. If you want to transfer it, if you want to if someone needs it, you want to send it out to somebody, you have zero access to it. You can't do anything because you're locked in. Now, if it's as flexible, that's different, but you guys have seen that the percentage that you get in return for being in a flexible duration is next to nothing. So you're taking all this risk, this counterparty risk, for a very minimal gain. I call it almost negligible gain. Why would you do that? So that's something to consider. Yes, you can earn yield. Yes, some of these will even still offer 10% or more depending on the token. And every exchange will do that. So whether you're on Huobi, whether you're on Kraken, they'll all have some form of this. So look for earn, try and find it through the headings. If it's products, in this case, it's individuals, and you'll find that earn category, and a simple earn can give that to you. So that's as simple as you can get in terms of how do you make some money in crypto, especially in the bear market, is lock up your assets, get something in return, call it a day. That's one. Number two, and here's what I said, that the risk is all on you, but the returns could be exponential. What is that? NFTs. And I know, whenever I mention NFTs, people don't want to hear it. They don't, especially now in this market. They're like, it's all hype. Look, it was proven, the market tanked. NFTs gone to zero. They mean nothing. Okay, look, every single asset got smashed along with all these markets. Stocks, you look at crypto assets, even the blue chips like Bitcoin and ETH, of course NFTs are going to follow that process. Now, it doesn't matter. It doesn't mean that the products were viable products. And the best part about being in a bear market is the fact that the operators of actual businesses generate revenue, focus on community, and have something strong and sustainable for the long haul, right? Whether that carries from the bull into the bear market and then on, or people are building straight in this bear market. And so that's fine. This is what happens in a capital market, is that those that can't survive get wiped out, and those that can survive usually get stronger. So the NFTs that we're talking about, the NFT market, is still viable, it's still strong, it's getting stronger. There's learnings that happen from all of this, and the communities are getting even more savvy about what it takes to run a successful NFT project. All right, but how do you make money from it? So let's get in here. So I just want to close all these down, and we're gonna go straight to OpenSea. And I just want to show you guys some of the things that I look for. I'm not actively trading this right now, but have done similar things to what I'm going to show you guys right now. Okay, so in this market, if you are going to trade NFTs at all, and they're already there on the market itself, there's a secondary market for it. You want to look at the blue chips if you can. So that could be Bored Ape, Mutant Ape, even things like CloneX or Artifact, all these things. So if you go here at OpenSea and then you click top, you'll see now CryptoPunks, nobody ever really sells any of those. So, but you'll see Mutant Ape here, other deeds. You actually don't even see Bored Ape in here, so there's no trading volume that's happening here. Porsche has been an absolute disaster, mainly because they did something that most Web2 companies are going to do, which is rely on their brand and don't account for the new way of doing things when it comes to Web3 and NFTs. You got to build community, you got to build awareness. There has to be engagement from a brand's perspective to engage the community, and then you release your NFT that has long-term implications. So you want to continue to support the community through the NFTs and build storyline and actually care about the community. They did none of that. And also on top of that, in this market, no one's looking for almost, like if you see here that their floor price, meaning the bottom, this is what they minted at, was 0.911 actually is what they did for their Porsche 911. That's way too high in this bear market. No one wants to buy that out. That's not going to sell out. And if it was 0.0911, it would have been a lot different. So a lot of awareness needs to be had in these Web2 companies. They don't get it until things like this happen. And then what happens is they'll turn around and say, well, NFTs are dead. No, it's the way you engage the community or lack thereof, which causes problem. But let's get back to what I would do when you're looking here. So if it's a blue collar or a blue chip NFT project, and I'm going to pick Mutant Ape for this. All right. You will see here that the floor price is 14.5. So floor price just means the very cheapest price right now that's listed for someone who's willing to buy. Okay, so here it is, 14.5. And say what you want about the art, that's not what we're looking at here. But one of the first things that I look at is what was the last sale. So you guys can see at the bottom here, I mean, every time I hover, it's going to change. But for this particular Mutant Ape, it's right now listed at 14.54 and it was last sold for 15.8. So at some point in time, it was sold higher than what it's selling now. So, okay, good indication that at least at some point in time, someone was willing to pay a higher price. If all you're going to do is trade. But I like to look for something a bit of a bigger gap just to kind of dive in a little bit more. So let's see if we can find one. 14. No, look, I mean, some of these, the last sale was less, 12 ETH, and now it's being sold for 15. So someone's trying to make a profit on these, obviously. And yeah, and this has actually changed since I last saw it. And that's one of the things in the NFT market is things change so quickly. So what you see or what you saw yesterday or a few hours ago, you come back and it's completely changed. So that definitely happens. Yeah, they're all right now being sold pretty much in line with what they were sold prior to or less. But look at this, okay? You guys can see here that the last sale that was made here was 6.45. So pretty much this person has held on for quite some time. They did not sell when things were going crazy. And now they're listing it for almost 16.5 ETH. Pretty good return if someone bites at that. And that looks like the market has definitely changed. But look, or even if we go here, you know, if you've got the means, you can see here that this particular one, this Mutant Ape 14456 is being sold for 16.9 ETH. And it last sale was 19.89. So we're looking at about a 3 ETH difference. So if we click in here, now I usually like to see something a little bit higher. So I want to see, you know, ideally I want to see at least a 5 ETH difference between where it's being listed today versus where it was sold previously in my favor. Okay, that's what I kind of want to do. So you want to look in here, there is a price history there. You can see some offerings, you see some properties over here about it, but really what I'm looking at, first of all, here's what I'm really looking at, just from superficial, is I want to see how many favorites there are. The more favorites people have made this particular Mutant Ape may mean that there's a larger audience out there that's willing to purchase this when the time is right. You know, that's not a fast and hard rule, but it is something that I kind of like to put in there. So you'll see there's quite a few views, 967, but there's really only 9 favorites. So no, people aren't, you know, fighting to get this particular Mutant Ape just based on these 2 numbers. So once you see that, then I look down here and I look at the item activity. And we will want to see as we go through, ideally you want to see higher and higher numbers throughout. Okay, so right now it's being listed at 16.9 and its last sale was 19.89, and this was done 17 days ago. So just in 17 days, there's been a 3 ETH difference, which is, you know, almost like 4,000, maybe a little bit more than that, 4,000 US. So if you flip it, you still make something. But if we scroll down, it actually got sold for 18 ETH. And then 7 months ago, we're looking at 17, almost 17.8, 17.5. And that was that's it. Like, in this, we're looking at like, we're still pretty good here. A year ago, 10 months ago, you know, we're still looking pretty good that he didn't sell it, transferred it, and did all kinds of stuff here. So I wouldn't like this one. Again, there's only 9 favorites, or 9 people who made this a favorite. There hasn't been much volatility in the pricing, even when the market was much better. So it's not something I would do. But this is just an example. All right. So that's one area, is that when you already have a secondary market. Then the second way of doing it is actually to try and get whitelisted or in a private sale. You know, you want to get in before the public does. And a lot of these projects, what they'll do is they'll generate some hype, they'll generate some, you know, some headlines or some attraction to this project. And they may lay out how you get whitelisted. Whitelisted basically means is that you are going to have access to the NFT before anybody else. Now, a lot of times they don't do a reveal. You don't know what you're getting. You're just getting, you know, you're getting a placeholder basically, and the reveal will happen at some point later on after the public sale. So it'll go whitelist, it'll go private, and then it'll go public mint. And the public mint is kind of just when it opens up to everybody, you're good to go. And then it goes to the secondary market, which is like OpenSea here. So what you'll see is you will actually see a lot of people who will get those placeholders and they won't initiate the reveal. They'll actually list them on the public market and all you see is the placeholder there. Why do they do this? Because they play on your emotions that maybe this particular one will be a rare reveal. The chances of getting a rare one just off of a public sale is pretty slim. Slim to none almost. If you get whitelisted or whatnot, you have a better chance. So this is the strategy to use. If you can buy multiple, you buy, let's say you can only buy 2. All right, so if you get whitelisted, you get private sale, okay, great. Even if you're gonna do public or secondary market, but the reveal hasn't happened, you can, it's not great, but you can sometimes get by. And what you do is you buy 2 of them. Again, make sure the reveal has not happened. You buy 2 and then you list one of yours that has not initiated the reveal as well. So you keep one in case that becomes a rare one and you list one. And that way someone can pick it up. Maybe you've made the amount that you've invested in it and you still have one NFT sitting on the side that could end up being rare that you could flip or keep, whatever you like to do with it. So always try and buy multiples where you can sell half or list half and keep half. There's a way that people continue to make money even in this market. There's still projects being released. This is how they do it. So keep your eye out. Even if you want to monitor projects, you can, to see how they do in the market and how it goes forward. I'll tell you this, these Bored Apes, these Mutant Apes, all these people, these blue chips that are sitting here, they're still making money. People are still making money off of these, okay? And when that bull market runs its turn again, these things are going to pop even more.